Alright guys, so I hope you're doing fine as always. Today I'm making another video about this 3.7R trade I took on BIGTIME USDT. I did record my charts live when I was looking for the setup, so it will be a similar video to the other ones with the live setups. Only I just want to briefly explain or go over fair value gaps, as this trade was also based on fair value gaps, and that's not a concept that I use too often in my trading or talk too often about on the Discord server or in the live stream, so I would just like to briefly go over this. So let me just display this image, show what's a fair value gap. It's this gap right here, so it's the gap in between the previous wick of the wick of the previous candle and the wick of the next candle. So if there's a gap in between these two wicks, then we can talk about a fair value gap. So what is a fair value gap? A fair value gap, or FVG, as you will see a lot of times, they refer to a price inefficiency in the markets where there is a significant imbalance between buyers and sellers. These are often seen as a large price movement with very little trading activity. So these fair value gaps are caused by a sudden or a strong market movement and that are driven by imbalances between supply and demand. So this usually will happen in periods of high volatility. You will see often these fair value gaps. In these periods of high volatility, price will often move so quickly that not all levels of liquidity are filled, and so they will leave behind these fair value gaps in the chart. The fair value gaps, as you might know or might have seen already, they usually or a lot of times they do get filled. Reason is institutions and market makers dislike having these fair value gaps in the price charts. But why? So institutions and market makers dislike these fair value gaps because they do represent areas of price inefficiency and lower liquidity. So areas where large buy or sell orders couldn't be fully executed. These gaps can therefore distort the markets as prices moved too quickly without proper volume. So closing these fair value gaps allows institutions and market makers to return to fair pricing, balance supply and demand, and execute orders with less slippage, which is very important. So therefore ensuring a more stable and efficient market condition. So that's the reason why we often see these fair value gaps getting filled. And often people look at fair value gaps for potential take profit zones, potential reversal zones, or zones of interest. So now we briefly went over the concept of fair value gap. I would say we can jump straight into the live setup. Alright, so now for the actual setup part of the video, I'm on the BIGTIME USDT chart. This was one of the biggest gainers of the day. You can see here on the 1 hour time frame, we have this very strong move up with a lot of strong vector candles. So the first thing we do when we open the chart, as always, whatever time frame we're on, is we look to the left and see if there's anything interesting. Right now, we're seeing here this line over here is where the price is sitting at the moment. So we see here we have this fair value gap, as we explained in the intro of this video. We also have this area with wicks sitting around here. So this is already a very interesting zone of the bet for me. So we have this area of wicks, so this is previous support, which can turn into resistance. And we have this fair value gap, You can see on the 1 hour time frame, there's no fair value gaps sitting above and no more vector candle action sitting above. So keep that in mind. So we draw our fair value gap box. You can see prices tapping into this fair value gap. Quick check on the 4 hour time frame. We go now to a lower time frame. So now I went to the 15-minute time frame to see if there's any vector candle action in this area. You can see we still have this unrecovered vector candle sitting here on the 15-minute time frame. So I'm drawing my line there. You can also see again even more wicks at this level. So very strong zone. Then we go to our 5-minute time frame to check, and we see we have some vector candles even higher. Another line there. And back to our actual price. So as we saw in our 1 hour time frame, there's no more fair value gaps above, no more vectors to be recovered above. On the 15-minute time frame, these were our last vectors to be recovered. And again, on the 5-minute time frame, there's also some vector action happening in this blue box or fair value gap from the 1 hour time frame. So I'm interested in a short position here. Now we are going to check where would be a good take profit for us. So I'm taking my Fibonacci retracement tool from the beginning of this move to the current highs of this move. In such strong moves, I really prefer to look around the 382 Fib retracement. As we could see a retracement and a strong continuation, this will happen a lot. So in very strong moves up, the 382 is my favorite level to look for. You could target 0.5 or 0.0618, but keep in mind if it's a strong move up, we could see a retracement to the 382 and continue higher from there. So for me, 382 here. So I'm placing a line at my 382, checking to the left. We see here we have this small area, a very small area of consolidation before dropping further. So I'm moving my line a bit above, so I'm sitting at these wicks of that consolidation on the 15-minute time frame or the 1 hour time frame. Let's check the 1 hour time frame. So on the 1 hour time frame, then I'm going back to my lower time frames. Here again, checking around this area of the 382 retracement, just moving it to areas that make a bit more sense on the smaller time frames. We have here this wicks and this fair value gap again right here. I didn't mark the fair value gap, but you could see there's a fair value gap here and vector recoveries above. So that seems to be a good TP zone. So again, recap, 382 on the 1 hour time frame, Fib retracement, then slightly above the consolidation zone from the 1 hour time frame. To our lower time frames, we look for sitting wicks. We see this fair value gap. So a very interesting area to be recovered. So we target that as our take profit target. Stop loss we put slightly above our fair value gap recovery and the final vector recoveries, just in case. So right here I was looking for an entry. I did put, if I remember correctly, it might even be a market order. That's why I put my entry a bit lower as I jumped straight in, because we saw we pretty much recovered over half of this fair value gap. We recovered our 15-minute vector candles. We could have waited to see if we recovered the 5-minute vector candles, but okay, the risk to reward ratio was still very nice if we entered around this 15-minute recovery, so I decided to jump in there. We still have a 3.7 R. And that's pretty much all that was to this trade. So yeah, recap, FIB retracements, fair value gaps, vector candle recoveries, and just areas of interest, so key zones. Here we could see that the trade eventually turned out into full profit. So what do we notice? Here we went pretty much straight down from our entry into this, let's zoom in, into this full vector candle recovery. So this could have also been a good TP area. So they recovered this vector candle. From there they moved up slightly a bit again. What instantly jumps out on this chart is this massive candle up. You could see, nevertheless, they didn't stop us out. They just took the liquidity sitting at this wick, so people that had their stop loss somewhere over there. So yeah, they have taken the liquidity, they filled more of the fair value gap, they filled more, or they recovered more of the vector candles, but that's why we have our stop loss above this. So if we go back a little bit, we should have the screenshot as well. Now here you could see the screenshot of the trade, entry at 0.14232, take profit at 13,455. So in hindsight, if we have a quick look at what happens on the 1 hour time frame, we could see this was also a swing level. So you could have potentially taken a swing trade all the way back down into this vector recovery. I personally looked for a scalping setup, so that's why we have our TP the way, or at the place where we have it right now, as explained in the video. If you're more of a swing trader, this could have also been a potential swing trade to target to retrace all the way back down, but you really have to be bang on with your TP here as we bumped straight up from there again. But that's hindsight, of course. Again, in trading, you can't be greedy. Be happy with your take profits and don't look at what could have been. So we were looking for a scalping setup, which only took a couple of hours. We have found our scalping setup and we are out of the trade, no matter what happens after. So that was pretty much all that there was to this big time trade. So as always, if there are any more questions, please feel free to leave them in the comment section or in the Discord server, and I'll catch you guys in the next one. Take care, see ya, bye bye.